Coming up, the European Central Bank cuts interest rates. So are we at the start of a global trend and the market implications? That's all next. Your daily 10-minute business and finance news wrap for this Friday, the 7th of June 2024. The Australian share market finished the week on a strong note. The S&P ASX 200 0.5% firmer at 7,860. For all the details, I spoke with Zoran Kresovic from Eightcap. Zoran, so the market's higher today. Why and which sectors are driving it?
Well, a really, really good day in general on financial markets when we have a look at the overall scheme of things. In fact, actually all week. So closing high today is very, very important for our market, given the fact that we are actually quite lagging as opposed to the rest of the world. I think actually there's a couple of components to this, Ricardo. Number one, obviously we're seeing 10 out of 11 sectors actually driving up and being up for the day. And also another interesting component is the fact that obviously we've had interest rate cuts earlier in the week, starting from European Central Bank as well as Bank of Canada. So if you have a look at the overall markets in terms of global equity markets overnight, we can see that they've been either muted or they've actually finished up, and obviously that's reflecting on ASX as well today.
As you mentioned, we're starting to see some global central banks cut interest rates. Overnight, the ECB cut rates for the first time in 5 years. It follows the Bank of Canada yesterday. We've got the US Central Bank meeting next week, then the RBA after that. Question is, are we at the start of a global interest rate cutting cycle?
I think that's a really important point that you actually raised. I think we might be actually at the start of the interest, at the global interest rate cutting cycle. But at the same time, something that we need to take into account is actually to be cautiously optimistic. So if you have a look at the European Central Bank, for example, whilst they did actually cut the 25 basis points overnight, it's important to know that actually some of the inflation is actually coming back, so or real inflation. So what we need to take into account here, that whilst the market is priced in, or they telegraphed to the market that June cut is actually coming into the effect, I think we also need to keep into context of the overall scheme of the market, and the fact that obviously market is pricing another 2 rate cuts from European Central Bank later in the year, but we need to actually have a look at the services inflation as well as the wage growth. These 2 components have been actually quite significant, and they've been actually coming back, so it will be actually looked in more details. In terms of us here, if you're referring to the RBA, market is not actually pricing any interest rate cuts until the end of the year, and there is a couple of components for that. Number one, we have been a central bank that actually started raising the rates very, very late in a cycle. So RBA has been one of the latest banks that actually started raising the rates, and as a result, obviously we will probably one of the latest banks to actually cut the rates. If you have a look at the US and Fed, yes, our market is actually pricing an interest rate cut in the month of September, 25 basis points, and then potentially following through in the month of November and December.
What about inflation though? Because inflation here is higher than the EU, Canada, and the US, for example.
That is absolutely right. So wage growth in Australia is actually still quite sticky and quite significant. Also, if you actually take other components of our economy, looking at the labor market as well, we can actually see that it's actually quite strong. Focusing on the unemployment data that's also coming out next week, and we've seen the numbers for the month of April, they were actually 4.1% versus the consensus of 3.9%. However, the important point here that we need to take into account is the seasonality aspect as well. So transitioning from first quarter of the year to second quarter of the year, we've actually seen a lot of people at the time change jobs, and not only that, a lot of actually people lost full-time jobs, and that's been actually compensated by part-time jobs in general. So, if you dig a little bit deeper into the actual numbers in itself, yes, it does appear that obviously the, economy is slowing down, and I do agree with that. However, are we within that 2 to 3% range, which is what the RBA or Michelle Bullock, the RBA governor, is actually looking for? We probably might not be there as of yet. So I would actually focus on a couple of components here. One is next week. We've got the unemployment data coming out again. Retail sales have actually slowed down, which is probably, good to see. In fact, for the economy in itself, where we are a spending society in Australia, and there was actually quite a lot of disposable income post the COVID. So we will be looking at closely the second quarter of CPI that's coming out on 31st of July. I think those numbers will actually provide a lot more clarity whether the economy itself or inflation is actually cooling off significantly, and focusing more on the core component as opposed to the headline component, because we can see that oil has been coming off quite a bit, and that's obviously gonna impact the headline numbers coming down in the second quarter in itself.
So even so, we're seeing these rate cuts around the world. How is all of that impacting currency and commodity markets at the moment?
Well, it is actually impacting quite a lot, and investors in general as well. And we can touch on that a little bit later on. But the important component here is obviously if you are an investor and trading or buying currencies, in particular, a lot of that would obviously be looked at the commodity currencies such as New Zealand dollar and Aussie dollar, because if you have a look at the US dollar, and if market is repricing itself for an interest rate cut in the month of September, then it's likely that we will actually see US dollar continue to decline. And that is exactly what we're seeing over the past couple of weeks as well. European Central Bank, or Euro, has been actually appreciating a little bit over the last week or so, but that's purely on the back of market repricing itself on the strong wage growth and services inflation actually coming back into the effect. Commodity-wise, gold and silver have been appreciating over the last couple of days because, whilst ECB and Bank of Canada started cutting the rates, obviously it might be pushed onto other central banks, and investors are actually looking for the potential rate return on investment, and that's something that actually that's actually helping the commodities such as gold and silver.
Okay, back onto the share market. Any company news you're keeping an eye on today?
Yeah, Life360, which is actually a company that's obviously providing social platform for tracking and following, has been done exceptionally well over the past 6 months. Something that I'm looking at closely, whilst it has been actually down 3.1% today, it has actually recently hit a $17 high here on ASX, but more importantly, with a $3.7 billion market cap, it's actually been just listed on NASDAQ. I think that's actually opened a lot of opportunity for the foreign investment into the company in itself. And since January till up around now, the stock has actually risen around 159%. So that's probably something that I'd be looking at very closely. Obviously, getting secondary listing on another exchange, and especially on the US market, which is actually quite significant, it could actually help the share price continue to rise up and go to potentially all-time highs as well.
All right. And speaking of that sort of thing, where else do you see opportunities for investors at the moment?
As mentioned previously, Ricardo, I see actually a lot of opportunities in the market right now, especially if you actually do see that interest rate easing cycle coming into the effect across the globe. I think that's only going to prolong and push equity markets to continue rising up. And given the fact that obviously ASX has been, in fact, actually range-bound trading for quite some time and hasn't broken an all-time high of 7,913, it might be a great opportunity to actually have a look at locally here on the ASX in itself. Going above that all-time high, or being just 0.76% of an all-time high, might create opportunities for equities. I'm also looking at a lot of inflow, or we are seeing a lot of inflow actually going into gold and silver, because it is a hedge against the risk, and with geopolitical risk going on across the globe, we might see opportunities in gold and silver continue to appreciate. And as long as gold can actually retest the all-time high of $2,450 per ounce, it could actually continue its uptrend within the next phase of the market, and maybe somewhere about 2,500.
That's Zoran Kresovic from Eightcap there. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.